Imagine you took $1,000, placed it in a single stock 10 years ago, and walked away. Today, you'd be looking at life-changing generational wealth. This chart shows exactly how that math plays out. Depending on your exact timing, holding through the splits and continually reinvesting, that initial $1,000 could have climbed past the $1 million mark. Reaching that milestone didn't require trading every week or chasing daily market hype. It required holding a highly specific type of company through years of volatile market cycles. The greatest financial returns rarely come from following the crowd. They come from recognizing the architecture of the future before the rest of the world even knows it exists. Today, NVIDIA is one of the most valuable corporations on Earth. But a decade ago, most people thought they were strictly in the business of making video games run smoother. If you wanted higher frame rates, you bought one of their graphics cards. Because of that reputation, traditional financial analysts largely wrote them off as a niche hardware maker. Missing the massive run-up meant missing a crucial technological overlap. The exact hardware required to render high-end video game pixels would eventually become the necessary backbone for artificial intelligence. A traditional CPU handles tasks sequentially. NVIDIA's GPUs use parallel computing, processing massive amounts of data simultaneously. That architecture, originally designed to calculate millions of pixels on a screen, provides the exact framework required to train complex machine learning models. The first real market signal for this broader utility came from cryptocurrency. Miners use GPUs to process blockchain equations, buying hardware by the thousands. This sudden alternative demand wiped out inventory at electronics stores, frustrating everyday gamers while driving an unexpected surge in corporate revenue. But the crypto boom was entirely secondary. The hardware was already positioned for a much larger shift in global computing. CEO Jensen Huang saw that shift coming. Years before artificial intelligence became a mainstream commodity, he directed heavy investments into AI-specific infrastructure. When generative tools like ChatGPT broke into the public consciousness, it triggered an immediate panic among tech giants. Everyone needed enormous computing power overnight. Those corporations were forced to spend billions specifically on NVIDIA's high-end hardware. Huang positioned his company as the only supplier capable of meeting the new demand at scale. NVIDIA occupied the role of the industrial supplier during the AI expansion, providing the essential chips that every developer required. Rival tech giants with unlimited budgets tried to manufacture their own silicon to break the monopoly, but they immediately hit a massive wall. NVIDIA's dominance is anchored in CUDA, a software ecosystem developers use to build AI systems. Once a team builds their infrastructure within CUDA, switching to a competitor's hardware becomes a logistical nightmare. The software locks them into the hardware. Investors rewarded this massive competitive advantage, driving the stock price incredibly high. NVIDIA then executed a 10-for-1 stock split, which further amplified retail excitement. Engineering a software ecosystem that made switching impossible created a level of market durability that physical hardware could never achieve on its own. Today, the market fully understands NVIDIA's value, but no company can maintain an exponential growth trajectory forever. The external threats are mounting. Well-funded rivals like AMD, along with dozens of agile silicon startups, are aggressively trying to crack the monopoly. There is also serious valuation risk. The current stock price assumes massive, uninterrupted AI spending. If corporate budgets tighten or the AI hype cools down, that valuation could face a severe correction. The reality is that the era of extracting massive, asymmetric wealth from this specific stock has likely passed. This trajectory provides a specific blueprint for identifying the underlying architecture of the next macroeconomic shift. Whether it's robotics, quantum computing, or a field we don't even have a name for yet, someone is building the foundational infrastructure for tomorrow's technology. The market will always create new vacuums. Generational wealth belongs exclusively to those who recognize the tools of tomorrow before the crowd arrives.